Good evening, students. Welcome to the session on internet. Good evening. Yes. So, what we have done in the last class was starting up with the reassessment part, right? We started with the reassessment procedure, which has undergone the change for your attempt. Now you see you have section 148A, show cause notice to be issued, and then the order will be passed under section 148A. And finally, the reassessment will be done, right, under section 148. Right? Are you able to see the screen? Okay, yes. But before that, what we have done it in the last class was this Pasteless Assessment under 144B. So wherein NFAC would be acting as the intermediary, it will assign the case to the AU, and then the NFAC will issue the notice under 143.2 to the assessee, right? The assessee will file the response to the 143.2, which will be communicated to the AU. And the AU can call for further information. Again, it can request to NFAC. NFAC will then send 141 to the assessee. And assessee may file the response. In case the assessee fails to furnish the response, and the same would be communicated by NFAC to AU, then in that particular case, the AU can issue the show cause notice as to why the best judgment assessment should not be made under 144, depending on the response of the assessee, and then the best judgment assessment can be made. In case it's a normal assessment, the AU can request the NFAC to ask the technical unit for some technical assistance for the purpose of verification of information, for the calling of information under 133. It can request the NFAC to request to VU, the verification unit. And whatever the responses are received, it will give it to AU again back, right? Now, based on the material on record, information obtained from the assessee, the assessment unit will proceed to make the assessment. In case the variations are proposed, which are prejudicial to the interest of the assessee, the show cause notice will be issued. Now, based on the show cause notice, the AU will then send to NFAC. NFAC will forward this show cause notice to the assessee. Now, assessee can respond to this notice. It can also request for the personal hearing at this point in time. And if it requests for the personal hearing through the video conferencing would be given. And whatever based on the response, the AU will then proceed to file the prepare the income or loss determination proposal. In case there are no variations to the assessee which are proposed in the assessment, then also the income or loss determination proposal will be prepared. This will then be issued to the NFAC. NFAC, if it may want, it will give it to review unit. Review unit will give the review on that. In case the AU wants to accept that review, it will, or it will reject it by recording the reasons in writing. And based on that, it will prepare the draft assessment order. Once the draft assessment order is prepared, it will again give it to the NFAC. NFAC will then decide it to prepare the final assessment order, which will then be served on the assessee. Are we clear? We had also seen how the special audit can be done in this particular case. If the AU requests for the special audit, it will request to NFAC. The principal commissioner in charge of that will forward the case to the PCCIT or transfer the case to the AO having the jurisdiction with the approval of the CBDT. Clear? So this is what mainly we had done in the last class. Okay. So we had also done the show cause notice under section 148. As I said, order under section 148, what is deemed to be the information and what is information. The information which will be as per the risk management strategy formulated by CBDT, audit objection, any information received from the foreign country under DTL, or any information which is collected by the income tax authorities or in consequence of any tribunal or court order. And in which cases 148A show cause notice is not to be issued when there is search or where there is a requisition of the valuable article seizure, all of that, right? Or if the information is received under 135A. Right? What is the time limit for the reassessment now? It is 3 years in case the income chargeable to tax exceed the 50 lakh rupees, which is represented in the form of asset. Asset could be immovable property, loans, advance, shares, security, bank deposit, or the expenditure or any occasion if it, or transaction in the books of accounts exceed 50 lakh, then in that particular case, the reassessment can be done up to 10 years from the relevant assessment year. And what is the time limit for completing the assessment? The time limit for completing the assessment is under 153, which is 12 months from the end of the financial year in which notice is served. For TP, it will be 24 months. Are we clear? Any doubt till now? I've quickly recapped everything, what we have done it in the last class. Yeah? Okay. Now, one very important thing which is done there in the reassessment part. Let's try and understand. Section 150, subsection 1 and 2. What is section 150, subsection 1 and section 2? 152. I'll put it directly from the Bare Act so that you know it then exactly what does it say. First, I'm writing about section 150, subsection 1. What does it say? Notwithstanding anything contained in section 149, notwithstanding anything contained in section 149, the notice under 148, so it is overriding the time limit for reassessment under section 149. Overriding the time limits under 149, which is 3 years or 10 years, right? The notice under 148 may be issued at any time for the purpose of making an assessment or reassessment or recomputation in consequence of or to give effect to any finding or direction contained in an order passed by any authority in any proceeding under this Act by way of appeal, reference or revision or by a court in any proceeding under any law. What does this mean? So 150 subsection 1 is overriding the 3 years and 10 years time limit. What is it trying to say? That in case if the 150 subsection 1 is applicable, the time limit of 3 years or 10 years will not apply. The reassessment can be open for any year, irrespective it is 3 years or 10 years from the relevant AY. Because that's what it says. A notice under 148 may be issued at any time for the purpose of making the assessment or reassessment in consequence of or to give effect to any finding or direction contained in an order passed by any authority in a proceeding under this Act. So, let's say for example, the Supreme Court is deciding on a matter. Let's say, if you remember, the freebies given by pharmaceutical companies to doctors. This is disallowed as the expenditure. Right? If you remember, now we have the explanation under section 37. But this is, let's say, prior to that. Right? And that is also prospective. So, the freebies given by the pharmaceutical companies to the doctors, the Supreme Court had clearly held that this expenditure is, let's say, disallowed. Now, if that expenditure is disallowed, let's say the order of the Supreme Court comes in 2020-21. Now, I have been claiming this expenditure. I'm a pharma company. I have been claiming this expenditure as deduction. Let's say I'm company B. This order has come in respect of, let's say, company A. Company A had gone into this appeal and this order has come in the case of company A. But we both are pharma company and even I have been giving freebies. So let's say I'm company B. I have been claiming this expenditure, let's say from AY 67. Now, ideally, the 3 years or 10 years time limit should have been applicable from here, right? Should have been applicable from here because this particular year for which the Supreme Court is, let's say, deciding the appeal, 3 years from that, I should have also been disallowed this expenditure. Or 10 years if the income escaping assessment was more than 50 lakhs. But because of 150 subsection 1, the AO can disallow the expenditure from the time when I have claimed this as expense. So AO can reopen the assessment of all these years to give effect to the finding or direction of the order passed by any court. Even if the 3 years or 10 years time limit have lapsed. Are we clear? So this can be reopened because of 150 subsection 1. Clear? What does 150 subsection 2 provides? Now 150 subsection 1, this is the exception to 149. 150 subsection 1 is exception to 149. 150 subsection 2 is exception to 150 subsection 1, meaning it restores 149. 150 subsection 1 is exception to 149. 150 subsection 2 is exception to 151, meaning it restores back the 149 time limit. Now, what does 150 subsection 2 provides it? Let's have a look. The provisions of 150 subsection 1 will not apply. Provisions of 150 subsection 1 will not apply. It's an exception to 151. In a case where the assessment, reassessment or recomputation as is referred in that section relates to an assessment year, in respect of which the assessment, reassessment or recomputation could not have been made at that time, the order which was subject matter of the appeal, reference or revision, as the case may be, was made by reason of any other provision limiting the time within which any action for assessment, reassessment or recomputation may be taken. What does this mean? It's very confusing, right? Are you getting something out of it? Are you understanding anything what 150 subsection 2 is saying? So this is trying to say that the time limit of 149 will be restored. But we are not getting anything out of it, right? Anybody can make it out what it is saying? Anyone? Yes, can you make out what is it trying to say? Read it properly. Yes. Read it once, both 150 subsection 1 as well as 150 subsection 2. Yes, read it very clearly and let me know what you understand. Yes. Anybody, just try to attempt it. Yes, I'm waiting for the answer. Read both the provision and let me know what it tries to say. Okay, let me explain it. So let's say, for example, if the assessing officer is making assessment of, let's say, AY 67, right? Let's say the assessing officer is making the assessment of AY 67. He passed an order in, let's say, 78, disallowing certain expenses which was being allowed to the assessee right from day one. In response now, the assessee is saying that this expenditure I have been claiming since many years. Now you are disallowing to me this expenditure. So the assessing officer will say that we have, let's say, a ruling of Supreme Court, and therefore I can disallow this expenditure. So by what logic assessing officer is disallowing even the expenditure prior to 67? As per 150 subsection 1. So as per section 150 subsection 1, notice could have been issued for reassessment right from, let's say, 1971 onwards, from when he was claiming this deduction. However, what 150 subsection 2 is saying, 150 subsection 2 says that we have to apply the period of limitation from the date of passing the order, which is the subject matter of appeal. So let's say here, in this particular case, the assessing officer is reopening the cases for all the years, let's say for AY 1970-71 onwards also, based on 150 subsection 1. Right? But what 150 subsection 2 is saying is that 1 will not apply. 150 subsection 1 will not apply in respect of the assessment which could not have been made at the time the order which was the subject matter of appeal. At the time the order which was the subject matter of the appeal. So which order was subject matter of appeal? Let's say AY 6-7 order, which had gone into the appeal. This is, let's say, the disallowed as expense for AY 6-7. Right? So this particular AY had gone into the appeal before the Supreme Court. So you have to see the time limitation from AY 6-7. You have to see the time limitation from AY 6-7. So, as per the provisions, from AY 6-7, the assessing officer can issue the notice for a period of 3 years or 10 years. So it can go back to 3 years or 10 years from AY 6-7. It could not go back to 71-72 or 70-71. So 150 subsection 2 is trying to curtail 150 subsection 1 by saying that not all the AYs can then be reopened. The reopening can be done from the AY when the particular subject matter or where the particular order was passed disallowing the expenditure. Disallowing the expenditure. So for the company A, disallowing the expenditure, the AO had passed the order in 6-7. So from this year onwards, you will take that to 3 years or 10 years. Are we clear? Are we clear? This is what we are talking about is company A. For company B, the reassessment can be done even for 70-71. 150 subsection 2 operates for company A, whose order is subject matter of appeal. For company B, whose order was not in the subject matter of appeal, B had never gone into appeal. B was having the similar case as that of A. So for B, the reassessment can be done without any time limit. Are we clear? Are you getting that? So for B, the reassessment can be done without any time limit. Are we clear? Any doubt? Any question? Is this clear? Is 150 subsection 1 and 2 clear or not? Yes or no? So object of enacting 150 subsection 1 is to give effect to the order of the High Court, Supreme Court, Tribunal, and to bring the assessment for the year in conformity with those orders without any time limit. So the question of time limitation will not arise in case of 150 subsection 1, because this is to bring the assessment in conformity with the order passed by these authorities or by the court. Are we clear? And 150 subsection 2, which is there, is exception to 150 subsection 1. So 150 subsection 1 will not apply where the reassessment proceedings would have been barred by the time when the order which was made by the AO from the year in which the order which was made by the AO, which is the subject matter of appeal, is passed. At that point in time, you will look at the 3 years or 10 years time limit. If the issuing of a notice for a particular assessment year had become time barred, at the time the order which is the subject matter of appeal has been passed, 150 subsection 1 cannot be invoked. 150 subsection 1 cannot be invoked. Okay? Are we clear? Any questions? Any question, any doubt? Yes or no? Okay. Okay. So this completes your entire reassessment provision. Any questions so far with the reassessment provision? Okay. Okay. So this is your reassessment provision. Now, one more important thing under the assessment procedure, which I would like to highlight over here now. So we have done 143.3, we have done 147 to 151. That also we have done. Then we have also done the time limits which are there for the assessment. Okay. Which is under 153. Fine. Now, what is one very important thing which is pending? Before we move on to the rectification part, this is in respect of the GAR proceedings, General Anti-Avoidance Regulation. Now, what is GAR? Let's say if the assessee is entering into a transaction with the objective of avoiding taxes, then the AO can invoke the GAR, General Anti-Avoidance Regulation. Invocation of GAR. When the GAR can be invoked? When the assessee has entered into an impermissible avoidance arrangement. Impermissible avoidance arrangement. What is impermissible avoidance arrangement? Where the motive of the taxpayer is to avoid taxes. So where the arrangement is entered by the assessee, which is impermissible avoidance arrangement, which means what? Where the main purpose is to obtain the tax benefit. Where the assessee has entered into impermissible avoidance arrangement where main purpose is to obtain the tax benefit. Now, if the assessing officer is having the opinion, right, that the guard should be invoked, if the AO thinks that the guard should be invoked, then the AO has to make the reference. So AO to make the reference to the principal commissioner or commissioner of income tax at any stage of assessment or reassessment proceedings. At any stage of assessment or reassessment. To declare an arrangement as impermissible avoidance arrangement and determine its consequences. To declare arrangement as impermissible avoidance arrangement IAA and to determine the consequences. This is provided under section 144 BA. So AO himself cannot invoke the guard. If he has the opinion that the assessee has entered into IAA, then he has to make the reference to the principal commissioner or commissioner of income tax. Now the principal commissioner or commissioner of income tax will then issue the notice to the assessee for submitting the objections, and it will give the assessee the opportunity of being heard. So, issue notice to the assessee. Now, if the assessee objects to the action, if the assessee objects to the action of the principal commissioner, and if it is satisfied, with the response of the assessee, then it will communicate the same to the AO by the order in writing. Communicate to the AO. In case it is not satisfied, with the order, with the explanation of the assessee, then the principal commissioner or the commissioner will make reference to the approving panel for declaring the arrangement as IAA. So if it is not satisfied with the explanation of the assessee, reference to the approving panel. Reference to the approving panel for declaring arrangement as IAA. In case the assessee does not respond, then the principal commissioner or commissioner of income tax will issue the directions as he will deem fit for declaring the arrangement as IAA. Issue the directions for declaring the arrangement as IAA. Now, if the principal commissioner is not satisfied, he will make a reference to the approving panel, right? He will make a reference to the approving panel. Now, the approving panel will again give opportunity to assessee to present his side of arguments. Now, what is approving panel? The approving panel is constituted by the central government. It has total 3 members. The chairman, who is a judge of a high court, 1 revenue member, which will be the principal chief commissioner or chief commissioner of income tax, and 1 academic person having the knowledge in tax and accounts. So 1 will be the judge of the high court. So 1 is from judiciary, 1 is from academics, and the 3rd is from the revenue. Are we clear? Now, approving panel has the power to issue the directions in respect of declaring an arrangement as the IAA. And it will conduct all the inquiry, or it will direct the AO to conduct the inquiry. It may call for records. It may require the assessee to furnish the documents. It has all these powers. Now, approving panel will give the opportunity to the assessee to present his argument, right? And it can direct principal commissioner of income tax or commissioner of income tax to make further inquiry. It can call and examine the records. Call and examine the records. It can require the assessee to furnish the documents and evidence. Furnish documents and evidence. And based on the material on record, the approving panel will issue the directions for declaring the arrangement as IAA and specify the previous year in respect of which it is so declared. So, directions to declare arrangement as IAA. Even in this case, where the response is not received from the assessee, the PCCIT or PCIT or CIT will make again a reference to the approving panel, and it can then issue the directions to declare the arrangement as IAA. Now, against this particular order of the approving panel, against the directions of the approving panel, no appeal can be filed. The assessee cannot make any appeal. And these directions are even binding on income tax authorities. On the income tax authorities and assessee. On the income tax authority as well as the assessee. And based on the directions of the approving panel, AO will complete the assessment after taking the approval of the PCIT or CIT. After the approval of PCIT or CIT incorporating AP directions. The directions can be passed within the period of 6 months from the month of reference. Are we clear? Clear? So this is the GAR proceedings. In case the GAR is invoked, this is how the reference has to be made. No, Saurav, GAR is not only for non-resident, it is for both resident and non-resident. Clear? It is for both the resident as well as the non-resident. Any question? Yes. Any doubt, any question? Okay. Yes or no? Right. Now we move on to another important area. Search. What you have already been asking to me, raid, search, right? You were very inquisitive about this topic. Ma'am, what is search? What is raid? When can the raid be made? When can the search be made, right? You were asking about all these topics last time. Now the time has come to discuss about the search proceedings. Now, search proceedings or the search operations is provided under section 132, 132A. Right? Search operations are provided under section 132. So now what is search and how the search proceedings are carried out? If you remember, we have done survey under 133A. For survey, what were the surveys on? The survey was on the business premises or where the charitable activity is being carried out, or for that matter, where let's say the occasion or event is happening, where the nature of the event or where the nature of the expenditure is such that the inquiry may be called upon. Right? For the survey, it could be during the business hours. For the charitable purpose or in respect of any function, it was during the after sunrise but before sunset. So even in a function, ceremony or event, the survey could be conducted if it is required by the or if the scale of the expenditure or the nature of expenditure was such that in connection with the function that the income tax authority is of the opinion that it is necessary and expedient to do so. And during the survey operation, they could inspect the books of accounts, they could impound and retain the books of accounts for a period of 15 months, they can place the identification marks, they can seize these books of account, but with respect to the cash stock in trade, they can only check and verify. Even the same is with respect to the valuable articles. They cannot remove any cash, stock or valuable article from the premises. That was the survey proceedings under 133A. Are we clear? This is the search proceeding under 132. Now, search proceedings which are there, these are specifically enacted because it is always feared by the income tax authorities that the taxpayers may use several schemes. The taxpayers could manipulate the books of accounts. They could have different books of accounts. What they keep with themselves may be very different from what they are disclosing to the income tax authority. They could have fake invoices, right? They could enter the fictitious transactions. So they could evade the taxes. Right? They could evade the taxes. They are not avoiding the taxes, but they are evading the taxes. So therefore, it was thought that the search operations can be carried out in a transaction where there is massive tax avoidance. So when the search operation can be carried out, where based on the information in possession there is one second. There is reason to believe. There is a reason to believe. And what reason to believe is there? The reason to believe is in respect of the assessee. And what is the reason to believe for the assessee? The reason to believe is in respect of that person to whom summons are issued for calling the information, right? Or notice is issued under section 131 or 142(1). Under section 131, 131 was with regard to the information, power regarding discovery, production of books of account, when the summons are issued to call for the information, right? Or 142(1) is being issued to the assessee or to any other person. And if these particular orders are issued under 131 or under 142(1), so person to whom summon under 131, or you can write like this, summons are issued under section 132(1) or notice issued under section 142(1) to produce the books of accounts or other documents has omitted or failed to do so. Has omitted or failed to do so. Or that a person to whom summons or notice have been issued might not produce the books of accounts or any other documents. So either he has failed to produce or might not produce books of accounts or documents. Right? So either he has omitted or failed to do so willfully or might not produce the books of accounts or other documents. Or the person is in possession of any undisclosed income. Undisclosed income or asset. So the person is in possession of any valuable article, things, money, bullion, jewelry, which is not disclosed. Or he has any income which has not been disclosed. So where, based on the information in the possession of the authority, there is a reason to believe that the assessee has either not complied with 131 or 142.1, or he will not comply with it, or he is in receipt of, he has some undisclosed income or assets. Right? Then in that case, the authorized officer can undertake the search. Now, who is the authorized officer? The authorized officers in this case are the joint director, joint commissioner, additional director, additional commissioner, assistant director, deputy director, assistant commissioner, or deputy commissioner. Right? They could do the search, but it has to be authorized by their higher authorities. It has to be authorized by the higher authorities. Okay, so who are the authorized officers? Who are the authorized officers in this particular case? Joint director, joint director of income tax, then joint commissioner of income tax, additional director of income tax, additional commissioner of income tax, assistant director of income tax or commissioner of income tax, deputy director of income tax, assistant commissioner or deputy commissioner. Are we clear? So these are the authorized officers for the purpose of the search operation. Are we clear? Any doubt till now? Okay. Now understand one thing. Here, once they have the reason to believe, what all could be done under the search operation? So, power of the authorized officer. They could powers under search. They could enter and search any building, any vessel of, they operate these vessels or ships, any vehicle or any aircraft where he has reason to suspect that the books of accounts are kept. So enter and search any building, vessel, aircraft, vehicles where they have reason to suspect that books of accounts are kept, or the valuable article or assets are kept. Right? They can break the locks of any door, box, safe, or any particular place where the keys are not readily available. So, break the locks. They can search any person who is got out of or who is able to get into that particular building where they are searching, or any vessel or any ship or any aircraft which they are searching, if the officer has a reason to suspect that such person has secreted about any books of accounts or documents or money, jewelry, valuable article for which the search is being made. So search any person. Search any person, right? They can require any person who is in possession of any books of accounts or any other documents maintained in the electronic form to give the authorized officer the opportunity to inspect their books of account. So if the books are maintained electronically, right? So the person who is in the possession or control of books of accounts which are maintained in the electronic records, he will be required to afford the necessary facility to the authorized officer to inspect the books of accounts. So require any person who is having possession of electronic books of accounts to give facility to authorized officer. They can seize the books of accounts on other documents. Here they can seize the books of accounts and the documents. And where it is not possible to seize the books of accounts, they may serve the order on the owner or the person who is in the possession of the books of accounts that these books of accounts will not be removed or will not be dealt with except with the permission of the authorized officer. So he can also order them if he is not able to remove the books of accounts, right? He will order them that these books of accounts will not be removed or not be dealt with except with the permission of the authorized officer. This order can be there for a place of 60 days. So here they can impound the books of accounts or seize the books of accounts for a period of 60 days. If you remember, for the survey, we had only 15 days period, right? We only had the 15 days period. But here we have the seizure order for 60 days. Okay. So seize the books of accounts for 60 days. Are we clear? So where it is not practicable to seize any books of accounts or other documents, then the authorized officer may serve the order on the owner or on the person who is in the immediate possession that he shall not remove, part with, or deal with the books of accounts or document for the period of 60 days. Maximum 60 days. Okay. So if there is any practical difficulty in seizing the item that is liable to be seized, then in that case, the order can also be issued that they will not have to deal with the books of accounts. Any doubt? Are we clear? Any question, any doubt? So this is the order of restraint. Then they can place the identification marks on the books of accounts or document. Place identification marks on books of accounts or documents. Make copies thereof. They can make the copies of the books of accounts, or they can even place the identification mark. Are we clear? They can here also seize any money, bullion, jewelry, valuable article found as a result of search. Seize money, bullion, valuable article, which was not there under the survey. They can seize any money, bullion, jewelry, valuable article found as a result of search. However, any any bullion, jewelry, or valuable article or thing which is in the nature of stock in trade will not be seized. But the authorized officer can only make the note or inventory of such stock in trade. So it should not be not stock in trade. Are we clear? It should not be stock in trade. If it is a stock in trade, can make note. Can make the note or can do the inventory. Where it is not possible or practicable to take the physical possession of any valuable article or thing and remove it to a safe place, maybe because of the volume, because of the weight, or any other physical characteristics, or because of it being of the dangerous nature, the authorized officer may serve an order on the owner that he will not deal with this particular asset, or he will not remove this asset except with the previous permission of the authorized officer. And this particular order will be deemed to be the seizure of the valuable article or thing. Are we clear? So for the books of accounts, it will not be deemed to be a seizure order. But for the valuable article, there will be a deemed seizure order. So deemed seizure of valuable article if due to weight or physical characteristic it cannot be removed. It cannot be removed. Okay. Where it is not practicable to seize any money or bullion or jewelry or other valuable article otherwise than this reason. So if it is not practicable to remove for the reason of its weight or physical characteristic, then the deemed seizure order will be passed. But if it is not for this reason, if for any other reason it is not possible to seize the money, bullion, jewelry, then the authorized officer may serve the order on the owner that he will again not remove or deal with it except with the permission of the authorized officer. However, in that case, it will not be deemed to be the seizure of the valuable article. And that order will be in force for a period of 60 days. Okay, so you can write down. In case money, bullion, books of accounts as well, and documents, valuable article cannot be removed or seized for any other reason, then order of restraint That is, he will not deal with it, but not deemed seizure. But not the deemed seizure. Okay? Are we clear? Any doubt? Any question? Any doubt? Yes. Any question? Okay. They also have the power for the provisional attachment of property. So for the purpose of protecting the interest of the revenue and safeguarding the recovery, the authorized officer may, with the previous approval of his higher authorities, provisionally attach any property belonging to the assessee for a maximum period of 60 days to protect recovery and interest of revenue. So this will be for a maximum period of 60 days. Are we clear? And this provisional attachment which is there will cease to have effect after the expiry of the 6 months. Are we clear? Are we clear? So, for the purpose of protecting the interest of the revenue and safeguarding the recovery, the authorized officer during the course of search or within a period of 60 days from the date on which the search was executed, sorry, this will be for not 60 days, this is 6 months. For a period of 6 months. Are we clear? He can also make a reference to the valuation officer to estimate the fair market value of the property. So, reference to the valuation officer to determine fair market value of property. So you can also make a reference to the officer to determine the fair market value, or valuation officer to determine the fair market value of the property. Are we clear? Any questions? Any doubt? Yes. Any doubt till now? Clear? So in the search cases, not only books of accounts can be seized, but even the valuable articles can also be seized. And for that particular thing, you have the power under the search, not the survey. You have power only under the search and not the survey. Okay? Yes or no? Is this clear? Any questions? Any doubt till now? So under search, you can, if you have the reason to believe that the person to whom summons are issued or notice is issued under 142(1) to produce books of accounts will omit to or fail to do so, or he is not likely to produce, or he is in the possession of the undisclosed income or property. Are we clear? Yeah? Okay. Now, understand one thing. There are certain presumptions which are raised under the search. And what are these presumptions? Presumptions in case of search. So there are certain presumptions which are raised, which are rebuttable presumption. The presumption will be made that you have done this thing or this thing belongs to you unless you rebut it. So rebuttable presumptions in the case of search. Are we clear? And what are these rebuttable presumption? So the law presumes in the course of search that the books of accounts and the documents and assets which are found in the possession of any person belong to that person. So books of accounts and documents in possession belong to that person. Secondly, the content of the books of accounts and document are true. Content in the books of accounts and documents are true. Signature and every part of the books of accounts are in the handwriting of the person who can reasonably be assumed to have signed. So, the signature is of person who would have reasonably signed. Okay. So these rebuttable presumptions will be raised on the facts, and with the evidence, the assessment rebut these particular assumptions or presumptions. Are we clear? Clear? Any doubt? Any doubt? Any question? Any question? Okay. Now understand one thing. There is power to requisition the books of accounts under 132A. This is power to search. Power to requisition the books of accounts is under 132A. Again, under 132A, what does it say? Where the Principal Director General or Director General or Principal Director or Director or PCCIT, CCIT or PCIT or CIT, on the basis of the information, have reason to believe that the summons or the notice under 142(1) will not be complied or will not be produced, or any undisclosed asset or income is there, then the authorizing officer may authorize any income tax authority to require the authority to deliver these books of accounts or documents to the requisitioning officer. So this is calling for books of accounts which are seized under the search operation. Are we clear? So that is done under 132A. Are we clear? So on a requisition being made, the officer or authority under any other law in which the search is being done, let's say under the GST law, shall deliver the books of accounts to the requisitioning officer. Here it is not the authorized officer. Here it is the requisitioning officer who is requisiting, or requisition is made by him to deliver the books of accounts. Are we clear? So this can be done with any officer. The requisition can be made to any other officer who has done the search. It could be under customs, it could be under the GST law, or any other law. Are we clear? Now, the amounts which are seized or the assets which are seized under 132 or 132A, how these assets will be applied? How these assets will be applied? So the amount which is, or the asset which is seized under the 132A or under 132, then how this is going to be applied. So for that purpose, it says that it has to be applied against the existing liability under the Income Tax Act. It has to be applied against the existing liability under the Income Tax Act. Are we clear? So it will be first applied towards the existing liability under the Income Tax Act. So application of asset seized under section 132 or 132A. Existing liability under the Income Tax Act, right? Existing liability under the Income Tax Act. It will be applied towards that. So if the assets consist solely of money or partly of money and partly of other assets, the AO may apply the money in discharge of the existing income tax liability, as well as the liability which is determined on completion of assessment or reassessment pursuant to search. So any liability which will be determined after the completion of the search, including penalty or interest. Clear? So any money as well as any other assets may be applied for the discharge of the existing liability plus the liability determined in the assessments pursuant to the search. Are we clear? And any assets or proceeds which remain after these existing liabilities are discharged shall be paid back to the assessee. Now, in the case where release of asset or books of accounts ceased, if the assets are seized, where the person makes the application to the AO within the 30 days from which the asset was seized for release of asset, and he explains the nature and source of the acquisition of the seized asset to the satisfaction of the AO, then the assets are required to be released within a period of 120 days from the date on which the authorization for search was executed, with the prior approval of the income tax authorities. Are we clear? So, where the nature and source is explained to the satisfaction of AO, then, and if the application is made within 30 days from month in which asset was seized, right? Then the AO, then such AO, then in that case will release these such assets within the period of 120 days, right? With the prior approval, release the assets within 120 days. The assessee will be entitled to 0.5% interest per month if the asset seized exceeds the liabilities for the period after the expiry of 120 days. So in that case, if the assets are released after 120 days, then 0.5% per month interest if the amount of assets exceed the liability is greater than the tax liability. Are we clear? Okay. So in this particular case, if the application is made within 30 days from the month in which asset was seized, then with the prior approval, the income tax authority will release the asset within 120 days, but after the recovery of existing liability. Only after it has applied the asset for the recovery of existing liability, it will give it back to the assessee. In other cases, shall be released after completion of assessment. For the books of accounts, if it's not an asset, if it's books of account, if it is less than 30 days, shall not be retained for greater than 30 days. Shall not be retained for greater than 30 days. Can be retained for another 30 days with approval. Are we clear? With the approval, you can retain it for more than 30 days. Any doubt? So books of accounts and documents seized should be returned within the period of 30 days from the date of the order of assessment, unless the reasons are recorded and approval is obtained. With the approval, the books of accounts or documents can be retained for a period of another 30 days. Are we clear? Any doubt? Any question? Any question? Any doubt? Yes. Yes or no? Any doubts? Any question? Okay. Is this clear? Search operations, is it clear? Okay. Now, one case law which I would like to cover over here, which is in respect of, can the assessee's application for adjustment of tax liability on income surrendered during the search? So the assessee had surrendered certain income during the search. So assessee then made the application that you adjust the tax liability on income which is surrendered during search by selling the gold bars which were seized during the search operation. So consequent to the search in the premises of the assessee, some gold bars were seized from the locker. And the assessee voluntarily disclosed some income. He surrendered certain income during the course of search. He made an application that whatever the tax liability comes on this income, you take that or you pay off that income tax liability by selling the gold bars and adjust the tax liability on the income which I have disclosed voluntarily. So whether he can do that. So 132B says that the amount of existing liability and the liability determined. So the existing liability means what? That the liability already exists. A liability is determined. Now, unless and until the assessment is completed, the liability is not determined, right? So under 132B, the liability can only be determined either on the completion of assessment or even if it's an existing liability means it has already been determined. The assessee can make an application to the AO for release of the assets. However, he has to explain the nature and the source to the satisfaction of the AO. He has to satisfy the AO with the nature and the source. It is not that he will voluntarily disclose and the AO will accept it. No. So only when the liability is determined on completion of the assessment, it would stand crystallized. And only then the application can be made for the existing liability. Clear? So this is Allahabad High Court decision in the case of Hemant Kumar Sindhi that is there in your module. Are we clear? Yes or no? Now with regard to the assessment of the search, once the search is carried out, how the assessment will be made? The assessment will be made as per the provisions of 147 only. So 147 to 149 will be followed. Will 148A be issued in the case of search? The answer is no. The assessment in the case of search will be, once the search operations are completed, assessment as per provisions of 148 to 150. Right? In this particular case, 148A will not be issued because this is deemed to be the information. Directly 148 will be issued. Are we clear? Directly 148 will be issued. Yes or no? So 148A in this case will not be issued. And the time limits will remain the same, which are there for the 148, 149. Okay. And even the time limit for completion will be under 153. Are we clear? So shall we take a small break of 10 minutes and then we get back? For the survey, 148A will be issued, but for the search, 148A will not be issued. Yes or no? Clear? Now, after the break, we will start with the rectification of mistakes under 154. Okay? So let's take a break of 10 minutes and then we get back. Okay. So yes, students, any question, any doubt? No, Jacob, for the survey, we do not have any business hours or like that. What we had it for survey. Yes, we do not have such conditions. Okay. Okay, so let's get quickly started then with the rest of the assessment procedure. We are about to finish almost the assessment procedure. Now, the next topic, what we are going to see is the rectification. Now, let's say, for example, let me just consolidate everything. Okay, before rectification, one more important thing, what I just forgot to mention. Let me first consolidate and then we'll close this assessment procedure and we'll move to rectification. Okay. How did we start? PAN 139A, 139AA, Aadhaar. I'm consolidating quickly, everybody with me. 139A, the PAN obligations, right? So, who has to obtain the PAN? The person who has the income which is above the basic exemption limit. That's the first condition, right, for obtaining the PAN. Then there are other conditions also for obtaining the PAN. Other particular transactions are also notified for which the PAN is required, which is that the person carrying on the business or profession where the turnover or gross receipts are going to exceed 5 lakh rupees, or a person who is a charitable trust who is required to furnish the return under 139(4)(a). Every person who is entering into a financial transaction other than an individual, which is likely to amount to rupees 2,50,000 or more. That particular entity is required to obtain PAN, and any director, partner, member, karta of that entity is also required to obtain PAN. So, who were the persons who were required? Individual having the income above the basic exemption limit, right? Then, total sales turnover gross receipts exceed rupees 5 lakhs. Then, the entity entering into a financial transaction which is more than rupees 2,50,000, and every other person, every member, karta, partner of that particular entity also is required to obtain PAN. Then we had seen how the PAN is to be quoted. In which transaction PAN is to be quoted, I'm not repeating that. So we have seen that. Then we had also seen that the Aadhaar needs to be linked with the PAN. Quoting of Aadhaar number 139AA. Also, with respect to the PAN, there were 3 amendments. Every person who intends to deposit cash of 20 lakh or more in the bank account, or who intends to withdraw 20 lakh or more, or who intends to open a current account, they have to apply for the PAN. Are we clear? Then, in case you fail to intimate the Aadhaar number, then there is a penalty under 234H. There is a fee under section 234H, which says that it's rupees 500 in case where the intimation is made within 3 months from the last date of intimating Aadhaar. In case it's not done so, then 1,000. And if a person fails to link Aadhaar with the PAN before 31st March 22, his PAN will become inoperative. The consequences will be that the returns will not be processed, that the person will not be able to file the return, refunds will not be processed, tax will be deducted at the higher rate. Are we clear? Also, we had seen that what is the penalty for non-furnishing the PAN or furnishing the wrong PAN, that is rupees 10,000. Right? Then we had gone to return of income under 139. Every person whose income exceeds the basic exemption limit is required to file the return of income, right? Every individual. Other than the individual, the company or the firm is mandatorily required to file the return of income. An individual is required to file the return of income if he is a resident and ordinary resident, and if he has the financial interest or is beneficial owner of any asset outside India. In that case, he has to file the return of income. If he is a beneficial owner of any asset, including the financial interest in any entity, he is required to file the return of income in India. Or if that person has deposited exceeding 1 CR in the current account, He has incurred the expenditure of more than 2 lakhs for travel to foreign country, incurred the electricity bill of rupees 1 lakh, then in that case, he is required to file the return of income. Also, now there are 3 more specific cases where the total sales turnover is more than rupees 60 lakhs, gross receipts exceed 10 lakh, or the aggregate of TDS and TCS is 25,000 or more. In case of the individual who is greater than 60 years, it will be 50,000. Are we clear? Any of these conditions, even if the income is less than the basic exemption limit, you are required to file return of income. What is the due date? 31st July, then 31st October and 30th November for the transfer pricing cases. Clear? Non-audit cases, July. Audit cases, October. Transfer pricing, 30th November. Fine. Fine. This is fine. Then 139.3 we had seen was for the loss return. Then we had seen the revised return under 139.4, belated return under 139.5, updated return under 139.8. Updated return cannot be filed if it's a loss return. If it is a refund case, then the updated return cannot be filed unless it converts the loss into the income. Unless it converts the loss, if it has the effect of decreasing the total tax liability or increasing the refund, it cannot be filed. Are we clear? Then updated return cannot be filed if the case is under the search operation, if the assessment proceedings are going on or are completed, or there is the Black Money Act communication which is there, or the information is received under the exchange of information agreement, or prosecutions are initiated. In those cases, the updated returns cannot be furnished, right? And as I said, the updated return cannot be filed if it's a loss return, if it has the effect of decreasing the total income, or it results in a refund or increases the refund, right? So then in that case, the updated return cannot be furnished. Tax on updated return, if it was furnished till December, no tax. After December, it is 25% for the period of 12 months. And then after 12 months, it is 50%. Additional tax needs to be paid on the tax plus interest. Plus the 234A, B, C, all these will be applicable. Are we clear? Then we had, after we done the return filing, we had seen the 143.1 summary assessment, where there is any computational error or arithmetical error or any mismatch with the audit report or any wrong deductions claimed, all of that, the prima facie adjustments can be made under 143.1. That has to be done and the return has to be processed compulsorily under the 143.1. The return needs to be processed even if the scrutiny assessments are initiated. So under 143.1, you are required to process the return. The time limit for that was, what was the time limit for the 143.1? The time limit for 143.1 was the 12 months. The time limit for 143.1 was the 12 months. Time limit is there. So the, based on the adjustments, the intimation time limit is within a period of 9 months from the end of the financial year in which return is made. The 143.1 adjustment, 143.1 intimation will be sent. It will also be sent in the loss case, but where there is no adjustment or no tax due, then the acknowledgement of the return shall be deemed to be the intimation. So the time limit here is 9 months. Okay. Now, once the intimation is made, if there is any doubt about the recovery of the tax from the assessee, then in that case, to protect the interest of the revenue, the refund which is there, which is required to be issued to the taxpayer, that can be that may not be issued if the refund of any amount becomes due, and if the AO is of the opinion that the grant of refund may adversely affect the recovery of the revenue, then he may withhold the refund. Then after 143.2, there is an e-verification scheme based on the data collected from the third parties. The e-verification scheme can be initiated wherein the information will be collected from the assessees as to whether the information which is reported by the third party, why they have not considered in their return of income. If they have the genuine reason for not considering it, they could give the response. If they have not considered it, they could file the updated return. Once that is done, the assessment can be started under 143.2. Under 143.2, the assessment will start the notice can be issued within a period of 3 months from the end of the financial year in which the return is filed. So 3 months from the end of the financial year, 143.2 can be initiated. Now, once the 143.2 is initiated, then the AO can call upon for the inquiry for the further documents. For that, he could issue the 142.1 notice. Now, once the 142.1 notice is issued, as I said to you that time also, under the 142.1, the assessee is required to furnish the information to the AO, or the assessee is required to furnish a return of income if he has not furnished the return earlier, or he can, or the AO may ask to produce the books of accounts or documents, right? Then 142.1 can be issued. Now, the time limit which is provided under 153.1 for the completion of the assessment is also there for the 142.1 also. So for 142.1, the time limit is same as that of the completion of the assessment. There is no separate time limit for issuing the notice under 143.2, sorry, 142.1. 143.2 is 3 months, but for 142.1, the time limit of 9 months only is there. So the 142.1, of course, is issued to call for the documents or to file the return of income. So that could be done only when the assessment proceedings are pending, right? So the time limit is the same as that of the completion of assessment. So maybe you can just write it over here. The time limit is 9 months. Same as assessment, which is 9 months. If 142.1 return is not filed, the response is not given to that, or the return is not filed, the penalty is 10,000, plus the prosecution can be initiated, plus the best judgment assessment can also be made, right? Then the AO can also request for the getting the special audit done, and that will depend on the nature and the complexity of accounts, the volume of accounts, doubts on the correctness of the accounts, multiplicity of transaction, specified nature of the business activity of the assessee, but the opportunity of being heard will be given to the assessee, and the special audit time limit is 180 days maximum. Okay, so that can be done. In case the assessee fail to get the special audit done, then the assessing officer is entitled to make the best judgment assessment under section 144. Are we clear? The assessing officer can also make a reference to the valuation officer, and the valuation officer will have to give the report within the period of 6 months from the month in which the reference is made. Are we clear? So that is also provided under 142A. Now, these are the things which the AO can do. Also, the AO can call for the information under 133. Under 133, the information, the AO has the power of that of the civil court. He could issue the summons. He could call for discovery and inspection. He could enforce the attendance by issuing the summons. He can compel the production of books of accounts. So 133 is about the issuing the summons. This is 133 summons. Then he has the power of discovery and production of evidence under section 131. Then he has power to call for information under 133. He can call for the information under 133A. He can do the survey, which is different from calling the information. 133 is just calling for the information. He cannot impound the books of account. He can just go and collect the information, right? Then 133, that's under 133B. 133, he can call for the information from the let's say creditors, debtors, whatever. He can call for the information from the assessee. And under 133A, he can do the survey. Survey, the time limits, as the timeline is there when he can enter the premises, which is during the business hours. To collect the information, he can do it after the sunrise, before the sunset. But survey, it is during the business hour. For charitable institution, it is after the sunrise, before sunset, and even for the occasion. And then what was it? Then under the survey, he could impound the books of accounts for maximum period of 15 days. He cannot impound any valuable assets, right? And he has also the power under 133C to verify the information which is collected by cross-checking the information, right? So information, if these particular directions are not complied with, then there could be penalty of rupees 500 per day under 133, and under 133B it could be 1000. Are we clear? Then, as I said, he could in this particular manner complete the assessment. Now the assessment has gone into the faceless manner. That we had seen under 144BA. I am not repeating that. Then we had seen the reassessment under 147. The reassessment begins. For that, 148A show cause notice is issued. Then the order is passed under 148A. Show cause notice need not be issued if it's a search operation or if the information is received under 135A, which is the faceless collection of information under the information under 133 or 133C, 133B, all of these information, if it is received, then the show cause notice will not be issued. Survey is not covered. Survey is not covered under the deemed information. So for even in the case of survey, 148A notice needs to be issued. Are we clear? So even in the case of survey, the 148A notice needs to be issued. 148A notice need not be issued only in a case where the search is conducted. Only in a case where the search is conducted or the faceless collection of information where the information is collected under 133, which is calling for the information, collecting the information under 133B, or verification of information under 133C. Are we clear? Then in that case, there will be the deemed information received. Clear? Then once the order is passed under 148A, the notice has to be issued under 148. Time limit is 3 years, and if it is more than 50 lakhs income, then the 50 lakh, then the time limit is 10 years. Then we had seen that there is exception to 149, which is under 151, and 150 subsection 2 again brings back the time limit of 150 subsection of 149. 150 subsection 1 is for the giving effect to the order of Supreme Court, but that cannot be done. That has to be looked at from the day when the order is subject matter of the appeal, and from that day you will count the 3 years and 10 years time limit that is provided under 150 subsection 2. Then we had seen that entire reassessment timeline is under 153, which is how many months? Under the reassessment, for the assessment, the time limit was 9 months. The assessment, the time limit was 9 months. The assessment had to be finished, right? And for the TP cases, it was 21 months. But for the reassessment, the time limit is also given under 153, which is 12 months from the end of the financial year in which notice under section 148 is served. For the assessment, it is 9 months from the end of the relevant finance assessment year, right? And for the reassessment, it is 12 months from the end of the financial year in which the notice is served under 148. For TP cases, another 12 months is given. Are we clear? Then we had seen the search operations. Okay, search is under 132. We saw the powers of the search, how the assets seized can also be done in the search cases, and the books of accounts can also be seized for a maximum period of 60 days. Assets can also be seized. The application of the assets can be made for the existing income tax liability as well as the liability determined under the provisions of the for the assessment carried out in consequence of the search. The assessment will be carried out as per the provisions of section 147 only. Clear? Are we clear? Okay. Now one more thing in the assessment case. When the assessment is made, understand one thing. There is a provision that let's say, for example, in case the assessee, in case the AO does not furnish, let's say 143.2. Let's say if it's a reassessment and the AO fails to furnish 143.2 notice. He fails to furnish 143.2 notice. If it's a reassessment, your reassessment after 148 notice will go in a similar manner only, right? So under reassessment, you have 148A order, 148A show cause notice, 148A order, 148 notice requiring you to furnish the return of income. Then again 143.2 will be issued to carry out the assessment in the normal manner. And 142.1 can also be issued calling for the information. Now let's say the AO forgets to issue 143.2. Then in that particular case, will it invalidate the assessment? So there is a provision under section 292BB. What does it say? As per section 292BB, wherein assessee has appeared in any proceedings or cooperated in any proceedings, it shall be deemed that any notice which was required to be served on him has been duly served on him, and the assessee cannot raise any objection that the notice was not served on him in time or in a proper manner. So let's say, for example, if the reassessment proceeding was initiated, but 143.2 notice, which is also important, is not issued. Now, can at the appeal stage the assessee argue that no, this assessment was not valid? The answer to that is no. If he has cooperated in that assessment proceedings, he has appeared, he has presented the documents, all of that, he can then later on never argue that the assessment was invalid because the notice was not served on him on time, or because that the assessment was or the notice was not issued to him in a proper manner. If he has appeared before the income tax authority and he has cooperated, let's say the notice was issued after the time limit, but he appeared and completed the assessment, then also he cannot raise the objection later on. However, if he has already raised that objection before the completion of the assessment, then that can again be raised at the time of appeal, and the assessment will become invalid. So maybe you can write this point. Section 292BB. If notice is not served or served not within time, the assessee, if he has appeared and cooperated, the assessee, if he has appeared and cooperated, or you can just write down, then it shall be deemed that notice has been duly served upon him. He will be precluded from raising this objection later on, unless he had raised this objection before the completion of assessment. Assessment or reassessment. Are we clear? Right? Are we clear? Similarly, there is section 292B. What does 292B provides? I'm not talking about double B. Double B we have already discussed. 292B provides that the return of income, order of assessment, or notice or summons that have been furnished in accordance with the or in pursuance of any provisions of the Act, they will not be invalid merely by reason that any mistake or there is any defect or omission in the return of income, assessment, notice, summons, if they are in substance and in effect conformity with the provisions of the Income Tax Act, or if they are conforming to the objective of the Income Tax Act. So in case there is small omission or error, that will not lead to the fact that the return itself is invalid. If the provision is, if the return is in alignment with the provisions of the Act. Similarly is the case with the notices. So if there are few typographical errors, arithmetical mistakes, which does not materially affect the object with which the document was submitted by the assessee or by the department, that will not invalidate that particular document or the return of income. So you can write that section 292B, mere arithmetical error or typographical error will not invalidate return of income notices or orders if it is principally in conformation with provisions of the Act. Are we clear? Okay. Now, one more important thing. Can the assessee make a fresh claim before the assessing officer? He is, let's say, claiming a deduction by filing a letter before the assessing officer because the revised returns time limit is also completed. Does he have the power to do so? Can he file the letter before the income tax officer? The answer to that is no. So, if there is any error or omission, the assessee has to file the revised return. And the revised return can only be filed by December 31st, right? So, a fresh claim can only be made by filing a revised return and not by filing the letter before the assessing officer to allow him a claim. That is not permissible. So the assessee cannot raise a claim through the letter before the assessing officer. Assessee cannot raise fresh claim before the AO by filing letter. He can only do that through revised return. This is the Supreme Court decision in Goetz, India. Remember this decision. This is a Supreme Court decision in the case of Goetz, India. Another important decision. Let's say the assessee has not claimed the set-off of the brought forward losses under section 72. Is the AO bound to allow the same? So Supreme Court in Mahalakshmi Sugar Mills Limited case held that it is a duty of the AO to apply the relevant provisions of the Act for the purpose of determining the total income of the assessee. And if, let's say, the assessee was entitled to losses under section 72, but he has not claimed it, it's a brought forward loss, then it is the duty of the AO to assist the taxpayer in every reasonable way by allowing him the claim of the brought forward loss. So even if the assessee has not claimed the same in the return of income, it could be even with the depreciation also. If he has not claimed the depreciation, the AO is bound to allow him the depreciation what is necessarily provided under the Act. So even the brought forward loss should be allowed to the assessee even if he has not claimed the same. Clear? Even if he has not claimed the same. Is there any doubt till now? Clear? Are we clear? Any questions, any doubt? Yes or no? Yes or no? Okay. So, as I said, these were the points I just wanted you to write it over here. So maybe you can just write down if assessee failed to claim brought forward business loss, AO has duty to allow the same. Clear? Yes or no? Okay. Now, once the assessment is completed, once the entire assessment is completed, the assessing officer will prepare the computation of income, right? And he will then decide as to whether there is loss or the income. If it is a loss, then he will compute the total loss. He will send the intimation of the loss under section 157. He will send the intimation of the loss under section 157. In case it is a total income, right? In case it is a total income, then in that particular case, the assessing officer will then compute the tax liability and he will raise the notice of demand. So maybe what you can do here is the last stage in the assessment, you can just put it over here. Completion of assessment. This is under 153, which is 9 months from relevant EY. Determine the total income. Notice of demand under section 156. So the AO will issue the notice of demand, which will include any tax, interest, penalty, or fine. Right? Even in a case where the intimation is given under 143(1), that intimation itself is deemed to be the notice of demand for the purpose of 156. So, the notice of demand will be served on to the assessee to pay the demand which is there. That is under section 156. Are we clear? And this completes then your assessment proceedings. This then entirely completes your assessment proceeding. Are we clear? Now, once you are done with the assessment, you have received the assessment order. Now, what are the options available to you? What are the options which are available to you in that particular case? So once the assessment order is passed, and let's say you are not satisfied with the assessment order or the reassessment order. So then in that case, we have the following options. Under section 143.3 or under section 147, then with 143.3, the assessment order is passed. Or it will be best judgment under 144. Then you have the first option of rectification under section 154. Secondly, you have the option of revision under section 264. Third, you have the option of appeal to the CIT appeals under section 246A, or appeal the draft assessment order this is in the case of transfer pricing to the dispute resolution committee. So these are the options which you have when you get the unfavorable assessment order. Clear? Now first we are going to discuss about the rectification under section 154. Now rectification is provided under section 154 of the Income Tax Act. Now the rectification is in terms of where there is mistake apparent from record. So it should be mistake apparent from record. Mistake apparent from record means what? It should be the glaring mistake. It should be the glaring mistake. One which can be apparently seen and not searched for. That is the mistake apparent from the record. It cannot be a change of opinion. A mistake is one which is apparent from the record where it is obvious mistake, a very self-evident mistake. Mistake which is to be discovered by a long drawn process of reasoning or arguments or the change of opinion. I am saying something, your opinion is different, or there may be the two opinions, cannot be said to be mistake apparent from record. So what is mistake apparent from record is the glaring mistake or self-evident and not change of opinion, or one which is to be found after long drawn process. So it should be a mistake which is apparent from record. It can be a mistake of fact or it could be a mistake of law. Mistake of fact means the fact has not been understood properly. Deductions are not given. That's a mistake of law. Mistake of fact is, for example, that let's say, for example, if the assessee status is considered wrong, right? He is treated like as a company where it is a partnership firm. Mistake of law means where, let's say, for example, the deductions are not given, the brought forward loss set off is not given, the MAT credit is not given. These are the mistake apparent from the record, which can be self-evidently seen. You can see it from the order itself. Oh, they have not given me the tax credit, foreign tax credit. They have not given me the MAT credit. They have not given me the TDS credit. For this, you can go under 154, which is a small mistake. So in that particular case, you can go for 154. Now, when can the 154 be even suo motu issued by the assessing officer? Yes. So the assessing officer may also make an amendment on its own motion, suo motu. Right? He can also make when the mistake has been brought to its notice by the assessee or the TDS deductor or collector also. He can also do it on his own. But the opportunity of being heard should be given to the assessee if there is effect of enhancing the assessment or reducing the refund. Are we clear? Whether subsequent decision of Supreme Court to give effect to that decision, can it be said that that is mistake apparent from record? So yes. Subsequent decision of Supreme Court is also a mistake apparent from record. Would also constitute mistake. Because Supreme Court is the body which does not implement the law, it is the body which interprets the law. Supreme Court's role is what? The judiciary's role is to interpret the law. Supreme Court is the final law interpreting authority in our country, right? Now, once it is interpreting the law, this would constitute as if the law was existing in this particular manner or was to be interpreted in this particular manner always. What Supreme Court is doing is it is not bringing any new law. It is interpreting the existing law. What do I mean by interpretation? Interpretation means how the law was to be interpreted always. So Supreme Court's judgment gives effect in a way that the law was always to be interpreted like this. So that will also be considered as mistake apparent from record and the order can be modified under 154. Even the retrospective amendment in law. Even for the retrospective amendment in law, that is also considered as the mistake apparent from record. So for that also the order can be rectified under 154. Are we clear? It could be done suo motu by the AO or application by the assessee. So under 154, which particular orders you can make an application for? Under 154, you can make the application for the assessment order. Then you can also make the application for intimation under 143(1). So in case the intimation under 143(1), where they have not considered the tax credit, where they have not considered the MAT credit, where they have not allowed you the deductions, all of that can also be made an application for under 154. The TDS or TCS intimation. TDS or TCS intimation under 206CB or 200A. That can also be rectified under 154. Are we clear? Clear? What is the time limit for rectification? Time limit for rectification if the application is made by assessee or the deductor or collector, then it is 6 months from the month in which application is received. And in case if it is suo motu rectification, in case if it is a suo motu rectification, then it is 4 years from the end of the financial year, 4 years from the end of the financial year in which the order was passed. So this is the time limit for the rectification. Are we clear? This is the time limit of rectification. Now, understand one more thing over here. Here, the doctrine of partial merger is applicable. Here, the doctrine of partial merger is applicable. What do we understand by the doctrine of partial merger? So, there are two doctrines. One is total merger and partial merger. This is applicable for 154 and revision under section 263. This is applicable for revision under section 264. Now, what is it? Let's say, for example, this is my assessment order, right? Now, this assessment order which is there, let's see, for example, there are two issues or three issues in this assessment order. Issue A, let's say for disallowance of depreciation. Issue B, let's say for donation. And issue C is for, say, business expense. Right, this is my assessment order. These three additions are made, which are called, these three expenditure are disallowed. Now, with respect to issue A, I'm going for CIT appeals. With respect to issue B and C, I'm going for 154. In that particular case, can I do that? Can I do this? For issue A, I go to CIT appeals, and for issue B and C, I go for the rectification under 154. So here the doctrine of partial merger says that where any matter which is issue A is being considered and decided by appeal, is being considered and decided by way of appeal, then for issue A, I cannot go for rectification. So let's say, for example, if I say that I go to CIT also for issue A, only issue A I am going to CIT A, and for issue A, B, C, I will go for, let's say, 154. So for issue A, I cannot go for 154. It is only for issue B and C I can go for 154, because the order which is there for issue A, for which I have gone into appeal, that assessment order will merge with the authorities, higher authorities order. And then I cannot go for rectification for those particular issues. That is partial merger. Let's say, for example, if this is again my assessment order, let's say if I have issue A, B, and C. Now these three expenditure are disallowed. Now for this expenditure, I'm going to CITA. And then I'm thinking for all the three, I will go for 264. So can I go for 264 for issue A? Answer is no. Can I go for B and C also for 264? The answer to that is no. Because here the doctrine of total merger applies. What is total merger? That the entire order, whether I have gone for only issue A to the CIT appeal, the entire order of the lower authority will merge with that of the higher authority. So even if I have gone for issue A only to the CIT appeals, for B and C also I cannot go for 264 revision. But in case of partial merger, I can go for B and C for 154 rectification. If for issue A, I have gone to CIT appeals. Is it clear? Is this very, very clear, understood by you? Yes or no? Yes or no? Have you understood it properly or not? Yes. Yes or no? Any questions, any doubt? Any questions, any doubt? Virat, summons is calling for the information by issuing the summons, that is to produce the books of accounts, to produce these particular information or the documents or any other evidence. So that is summon. Summon is basically an order to appear before the any civil court. So what the power has the civil courts under 131, the income tax officer has the same power. So summon means issuing the order to appear before them. Clear, Viraj? Any other question? Clear? Okay. So there, as I said, that this is the rectification process under 154. That is the first step what you have available under the Income Tax Act as a remedy against the assessment order. What else you can do is, what else is possible here is the commissioner appeals or the revision under section 264. Revision under section 264. Or you can proceed to go with the, in case it's a transfer pricing process, transfer pricing assessment, then you can also go for dispute resolution committee. Dispute resolution committee. Are we clear? Now let's say, for example, if I go for the CIT appeal, then that is the process where I start going into the appeal mechanism. Then I have, after that, the ITAT, Income Tax Appellate Tribunal, which is the final fact-finding authority. Or let's say in both of these cases, after the DRC or after the CIT appeal, I can go for the ITAT. From ITAT, I can go to High Court and then to Supreme Court only if it is a question of law. If it's a question of fact, then ITAT is the final fact-finding authority. Clear? So this is how the dispute resolution mechanism works. Also, there is alternate dispute resolution mechanism, which is in the form of the advanced rulings, which you will learn separately. Which you are going to deal with separately. Advanced ruling is something which is the alternate dispute resolution mechanism that will be covered in a separate manner. Clear? Now, first we are moving towards the CIT appeals. After 154, the next topic is the appeal mechanism, the CIT appeals. Now, as I said, for the CIT appeal, the section is 246A. The section is 246A. Now, for the appeal, as I said, for the 246A, what are the appealable orders before the CITA? So the appealable orders before the CITA are the intimation under 143(1). So CITA, this is the first appellate body under section 246A. What are my appealable orders? I can appeal for the intimation under section 143(1). So for 143(1), either I can go for the rectification also, or I can also go for the appeal before the CITA. Or TDS, TCS intimation can also be appealed. Assessment order under section 143(3). Assessment order under section 143(3), except if it is passed by the dispute resolution panel, or except it is passed by the order of assessment passed by the AO with the prior approval of the principal commissioner where the GAR is applied. So, except in GAR cases or dispute resolution panel order. So if it is passed as per the directions of the dispute resolution panel, it cannot go to CIT appeal. Similarly, if the assessment order is passed in the GAR case after the approval of the principal commissioner, that cannot go to CIT appeal. We saw that there is no appeal mechanism for that. For the approving panel or directions, there is no appeal mechanism. For the order passed, you cannot go to CITA, you can directly go to ITA. Reassessment order under section 147, Reassessment order under section 147, except it is a case of reassessment in pursuance of the directions of DRP or where it is a GAR case. Are we clear? A rectification order, you can also appeal for the rectification order under section 154, enhancing the assessment or reducing the refund. So you can make a you can make an appeal for rectification order passed under 154, which has the effect of enhancing the assessment or reducing the refund, or order refusing to allow the claim made by the assessee, or order refusing to allow claim of assessee, except if it is the order of the guard. Except if it is an order of the guard. Refund order. Refund order under section 237. So like we have the notice of demand under section 156. You have the refund order under section 237. Then refund order is passed under section 237. Maybe you can write here only. If it is a notice of demand, we wrote for 156. If it is a refund order, then it is under 237. Not this one, sorry. Yeah. Refund under section 237. So in case the refund has been denied to you, you can also make an appeal for the refund order. You can also appeal for the penalties order. Right? You can also appeal for the penalty order under section 246A. So, penalty order. Order imposing any penalty, that also needs to be, that can also be appealed. Okay. Now, any order against the assessee and order which is against the assessee where the assessee denies his liability to be assessed under the Act. Under the Act. Now, what do we mean by this? Where the assessee denies his liability to be assessed under the Act. Now, understand one thing here, over here. Let's say, for example, that the assessee's liability was determined under section 115 QA. What was 115 QA? 115 QA. What was it? Buyback tax. Oh yes, buyback tax 115 QA 20%. Yes. On the buyback amount. Assessment of various entity. Yes, you remember. So let's say the assessee's liability is determined under 115 QA. Now, can the assessee appeal under section 246A against that order? Can he appeal against that order? To that, Supreme Court, in the case of Genpact India, interpreted this term an order against the assessee where the assessee denies his liability to be assessed under the Act. Here, there is no specific mention of 115 QA order which could be appealed. Right? Here, there is just a generic term which is used here is, there are specific orders against which the appeal can be made. Those are mentioned. But then there is one generic point which is there, that the order against the assessee where the assessee denies his liability to be assessed under the Act. Now, if here it is not used, assessed under 143 or under 144, nothing like that is used. What is term? Assessee denies his liability to be assessed under the Act. This is a very comprehensive term, which will include even the order passed under 115 QA. Now that 115 QA order could include the quantification of liability also, what the buyback tax has been determined to be payable by assessee, or even the case that whether at the first place the company was required to pay the buyback tax. So appeal against the commissioner appeals would be maintainable against the determination of liability under 115 QA. Okay. So here you can write down this term is very comprehensive and would include the question of determination of buyback tax liability under section 115 QA. Under section 115 QA. Are we clear? Okay. So that is about your CIT appealable orders which are there. The orders which can be appealed before the CIT. Okay. Now, if you have to go to CITA, there is the prescribed form and it shall be verified also in the prescribed manner. So, the form is form 35. You have to file if you want to go for the CITA. Plus, there is fee which is also given in your module that it is dependent on the total income. Where the total income is 1 lakh or less, fees is 250. Where it is between 1 lakh and 2 lakh, the fees is 500. Where it is more than 2 lakh, it is 1000. And where it is any other case other than 143 order, then it is rupees 250 is the fee. So that is the fees which is given in your module also. Now, what is the time limit? Time limit of appeal. When can you appeal? So if it is a case of assessment or penalty, then 30 days, within the 30 days period from the date of service of notice of demand under section 156. Not from the assessment order, but notice of demand under 156, which is usually served with the assessment order. In the case where it is the case of intimation, if it is a case of intimation, then 30 days from the date on which the intimation of the order is served. Intimation of the order is served. Okay. $30 days from intimation of order is served. Are we clear? So the 30 days period is given wherein within that 30-day period, you have to proceed for the appeal. Now, the appeal will not be admitted after the 30-day period. But in case there is the genuine reason, if the sufficient cause is given, then the delay can be condoned. So, delay can be condoned by CITA if sufficient cause is given. So, delay can be condoned if the sufficient cause is given. Also, the CITA will admit the appeal only if the entire taxes are paid. So, the appeal will not be admitted by the CITA unless at the time of filing the appeal, the assessee has paid the entire tax on the income which is returned by him, the income which is in the return of income. If no return of income has been filed, then the assessment, as per the assessment order, the assessee should have paid the entire taxes. So, appeal can be admitted only if taxes on returned income are entirely paid. However, based on the good and sufficient reasons, if there is genuine reason, the CITA may exempt the assessee in respect of payment of the tax on the entire income. Okay, so based on sufficient reason, CITA may allow exemption from payment of tax. Okay, but the assessee has to usually deposit the entire tax, but that could be condoned if the sufficient reasons are given. Clear? Now, based on this, the CITA will fix a date and will conduct the hearing. Now, again, this is carried out entirely in a faceless manner. So, the CIT appeal mechanism which is there is also done in the faceless manner. There is a faceless appeal mechanism. The hearings are also happening in a faceless manner through the video conferencing. Are we clear? Now, in the next class, what we will do is we will discuss about the powers of the CITA, and then we will proceed on to ITAT and High Court, and we will see the alternate mechanism which was there is under the 263 and 264, which is the Revision and Dispute Resolution Committee. And then we will proceed on to High Court and Supreme Court. Clear? So we'll stop here for today. Yes, Priyanka, I will upload it. Sure. So thank you so much. See you in the next class.